Good evening. My name is Nuno Sacramento. I'm the Chief Operating Officer for Safestay, and Safestay is a hostel company. We believe that hostels are the next wave of value in the accommodation sector, a little bit like Premier Inn and Ibis eventually took over the budget segment. We think there is a next wave of value that will emerge from doing hostels in the right way. So we put a management team together that we think gives us all the strength we need for this stage of the company's development. We're headed by Larry Lipman. Larry's biggest achievement in business, I guess, is Safestay, which tends to be a brand that investors recognize. And it's an interesting story because he bought Safestay when they had 5 shops. He bought it for £1 million. In the next 2 years, he bought another 22 stores and sold it for £100 million. So the fundamentals with Safestay was there's a segment that is fragmented, that there is no real brand identification. Larry saw an opportunity and on he went. Hervé is present here today for more technical questions, Chief Financial Officer. I suppose I'll just highlight the important bits of both Hervé's and my careers. Hervé's background is Accor, and we were very interested with a pan-European company, and we were very interested in acquiring a CFO that takes us to where we want to get to, particularly that has some experience in terms of acquisitions and growth. Finally, my most relevant experience is with Premier Inn. And what I'm trying to do in terms of the way we operate the business is to replicate the principles of being a truly guest-centric business. It's all about making sure that we meet the guest needs and that we develop a business model that is all about quality and finding an efficient way to do that. So that's us. It's the three of us in a fantastic picture there. And the question I get asked very frequently is why hostels? They've always been there. They've always been there, like B&Bs were always there, but actually there's a segment that just hasn't been explored. I'll go on to show you that the majority of the hostels in the world are small companies, 1 or 2 properties, 3 properties, but there are no relevant chains. So why hostels? I've already touched on these, a fragmented market, no real brand presence, no real chain presence, and we think that we can get to a point of consolidation. We think probably around 40 properties and a certain level of revenue will be ripe for an acquisition and will make it for a very interesting investment. Hostels are a very flexible product, so every time the property market is very hot, Edinburgh, for instance, right now is very difficult to acquire any property. What tends to happen is that certain buildings become either too expensive for hotels or too expensive for offices, but hostels can still fit one of these properties. We can go and find the odd property that everybody else would not be able to make a good return from. The bunk bed is FF&E in hostels is very economical, so the development costs tend to be very, very cost effective. And as I mentioned, there is probably the next wave of value accommodation. The interesting thing about hostels is people think of backpackers. Our business is primarily a groups business, so what we're primarily serving, this is 50% of our business space in the larger properties, is groups. It's school groups, sporting, amateur activities, parents traveling to keep up with the activities that their kids are doing. But increasingly so, families in city breaks. In a 6 dorm, you can put a family of 3 kids with mum and dad. It's not a great experience for mum and dad, but it's a great experience for the kids. And in fact, you'd need 2 bedrooms in a hotel to be able to travel. So Vienna, for instance, one of the locations we're in, a weekend away for a family, if you to take 2 hotel rooms, could cost anything up to £1,500. A hostel makes it all a lot more likely to provide that experience. These slides look a little bit, I'll gloss over them. It's just a pretty image to put some science behind what we're trying to do. Largely, what's happening with total travel with millennials and Generation Z is that they're more likely to spend a lot of their income traveling. They will do it more frequently, and they're less likely to retain their income to invest in properties, say. So what will happen, or the projections around the travel market, is that it will continue to grow. Hostels have always been resilient in terms of maintaining a level of global growth, very much because it's a fragmented market where there's great opportunity to explore. So hostels, for the time being, are a much more solid investment than hotels would be. Then the other thing that you get, and I'll refer to Premier Inn just because it's a world I know very well. Premier Inn is invested in the bedroom, a great quality bedroom, but not very much invested in the other experience. So breakfast is a key dominant of the Premier Inn offering, but then Premier Inn would prefer people to just go and do something else because it's very costly to deliver F&B. With hostels, you get the opposite of that. So a 50-bedroom hotel would probably have 70 sleepers. We put 200 sleepers in the same place. And with 200 sleepers, you can create very vibrant public areas. So typically, hostels generate a great level of income from the vibrancy of the public areas. People are going to want to be in that communal space, and therefore they'll spend money, because if you're there, you're going to unavoidably spend money. F&B is a leading element of that, but there's a wide range of very cost-effective elements of ancillary, one of them being commissionable business such as tours, and you're more likely to buy it in hostels because we're selling a value product. Then another interesting aspect is that hostels have always been an online business. Guess what? We've got a product and a customer profile that uses online platforms. So it's very easy to distribute our business, and it's very cost effective. For every £1 we spend in marketing, we can see the return because all the marketing we're doing is online, and therefore we can make it trackable. A complicated graph, maybe the sentence at the top is more of a reflection of our business. So in our larger properties, we put 50% of our business is groups. It's a great revenue stream because 3 to 6 months out, you have clarity as to what's going to happen. You can then sell the rest of the business trying to create an advantage on rate or trying to eliminate risk from the business by dropping rate. But if we to combine the large and small properties, our business is, segmentation is 40% groups, 45% sold through OTAs, OTAs being Booking.com, Expedia, and so on and so forth. And then 15% we sell directly. We believe that as we grow the business, we can start having more traction as a group, and we'll increase our direct sales through our website, and we'll decrease a little bit the cost of OTAs. Typically, OTAs cost 15% as a commission. So that's the context of the market, why hostels, where the market is today. And what we're doing, and we believe that that is the way to create a differentiated product and create great value for our shareholders, is by creating that radically new experience of staying in a hostel. In the British market, sometimes there is still this perception that hostels are halfway houses, and it's some kind of a compromise accommodation between a difficult moment in life and getting back into normal life in civil society. It's simply not what hostels are about. Hostels are about probably a young demographic, up to 34-year-olds, that want to experience a communal and vibrant experience. So the room is kind of an inconvenience. I'll have to sleep somewhere. But what I want is the social experience of traveling and meeting other people. We right now have 13 properties, and we think that up to a point of growth, we should be acquiring operating businesses. So operating platforms, we buy today, and we start making money tomorrow. The latest acquisition we've made was Vienna. We started the deal at the beginning of September. We took over the property in October and operated it as a hotel until January, started a soft conversion into hostel. but throughout there was no drag. There's no lag into starting to convert the revenue. From day one, we're generating revenue into the business. And then what we do is we think we've got a better revenue management and a better distribution approach. As soon as we buy these properties, we tend to put 10 to 15% uplift on the accommodation they were generating. A little bit because we've got a lot of groups, contacts with operators, and then because we're probably a few steps ahead in the way we manage online travel agents. We're the fastest growing hostel chain 2 years running. This is kind of, it's easy because we come from being really small. IPO in 2014, one property. 4 years later, in 2018, at the end of 2018, we had 13 properties. And we think we're going to continue to grow at this rate. We would like to get to 20 properties round about 2020. Halfway through the year, we think we'll get to 20 properties. And then by 2021, 2022, we think we can get to somewhere close to 40 properties. We have funds available for an aggressive rollout. So against all the downward trends in the market, we managed to do a fundraising in December. We raised £10 million from institutional investors. We had great backing from the existing shareholders that some of them wanted to maintain their position, and we managed to increase our portfolio of institutional investors. And then retail investors contributed with another £400,000 in shares. So we've got £10.4 million in the bank waiting to be invested, and we're being very cautious. We want every acquisition to add some significant value to the business. And largely, we've got this early mover advantage. Other brands are getting interested in hostels. Everybody's waking up to the fact that there's something about hostels, but nobody's doing anything with any pace. So we're miles ahead of everybody else. Again, just very quickly, this is more to show you that the large chains or chains with more than 11, there's no significant changes, because even with more than 11, you don't have any significant scale, but it's by exception. The large proportions of the market are owned by small properties. What we think we can do, the easiest way to get to our 40 ambition, is to acquire a couple of those businesses, and immediately you start generating sufficient funds to continue to maintain growth. So we had a great 2017, and then we doubled up on 2018. We had a great set of results. One of the things that we're keeping very much at the front of our business plan is the likelihood to stay with us again. So we're trying to create a brand that has legs, it's going to be here for the long run, and that is going to generate this repeated use. A little bit because millennials, because they travel more, if they find a product they have an affinity with, they're more likely to come and stay with us. So that 86% likely to stay again is an important number. Our revenue grew by 40% last year to 14.6 million. It had grown by 40% the year before, and this is because we're a rollout, we're on a growth curve, and we're going to keep on adding properties, particularly with the 10.4 we've got in the bank. Occupancy has grown to 75.6. I don't want to get too technical, but in accommodation businesses, 75.6, it's a pretty interesting number. Premier Inn runs at 72% with all their muscle. We're outperforming Premier Inn, so there's something good about that. There's a sweet spot at 80%, and then we're performing really well on rate as well. We still had some headroom to grow in occupancy. The next wave of growth needs to come from holding a bit more rate, and we think rate gets capped at 30. So you could, on a like-for-like basis, we've got 5% that we still need to grow, and we've got a great opportunity in rate from this 20 to the potential 30. Last year, we've added 3 properties. So in Vienna, we're by the Opera, for those of you that have been to Vienna. In Brussels, we're by the Grand Place. It's as good as it gets in both locations. I trust you traveled people and you identify all these places. And in Barcelona, we're in Passeig de Gràcia, which is the second most expensive commercial street in Europe. So we're not just adding properties. We think we're doing it with some panache, because millennials, they're discerning customers. They want to be where they want to be, and they will make some concessions with staying in a hostel as long as we're providing the right product. We managed to reduce our debt to capital ratio, and we'll continue to do so. We think that we want to steer away from overgearing the business, and we think that we want to steer away from debt, although we'll take cautious, for as long as debt feels appropriate and proportional, we'll take some steps into that if that were to be the case, not in the immediate future. And as I said, we've got 10.4 in the bank ready to make some investments. So after 4 years, what does the business look like? We're present in 7 countries. We've got 13 locations in some countries. In London, we've got 2 properties. In Barcelona, we've got 3, so there's multiples in some locations. And what we do is we go in, we see that the market has great potential. We know that we should acquire another property. We employ 250 people, so there's a pretty sizable payroll, but more interestingly, 250 advocates for the business that give us a lot to go for. And this year, we'll be providing 1 million sleeps. And these are the kind of numbers that when we talk to people start making us somewhat of an important player in the market. 1 million sleeps, if you start multiplying the numbers by the average bed rate, you start, it's a very interesting business. The other important aspect is that as we grow, we manage to create more digital presence, and digital means selling the business cheaper. The typical cost of a digital sale is significantly lower than having to go through OTAs, which is the hotel business model at this point in time. So the projection is these. We think that somewhere around halfway through 2020, we should get to 20 properties by probably acquiring a couple of groups, a couple of small groups that give us the 6 or 7 properties we need to get to it. And then the next stage of growth, which is probably self-funded because we bought the 3 properties last year from our own money, so we can continue to do that, more so as we grow the portfolio, increase our bank account. And we think that around 2021, 2022, we'll get to those 40 properties, which will be an interesting stage for the business because at 40 properties, we become very interesting as an acquisition, and maybe the company needs to be run by a different brand. We think that we get a lot of interest from other brands that think that rather than trying to develop the hostel segment in their own portfolio, they may just go out and buy someone else. These flags are the flags where we are now. That's where we've got presence. All the others are just to give you an illustrative view of where we think we need to be next. Very much European, pan-European, and very much focused on creating a network. We know that when we buy Brussels, we increase the sellability of the rest of the business because we find a new tour operator, find a new set of groups, we get in touch with different schools, and all of those people in there will be traveling to all our destinations. So we want to increase the network within Europe. So how do we measure the business, and how can we give investors some confidence that we know what we're doing? So we want to be in top touristic European destinations. We want to be in the right spot. So Passeio de Graça is second most expensive commercial street in Europe. That's kind of the places we want to be in. We don't want to be over there or in the suburbs. We think that 200 beds plus is what really energizes the financial model. And then we've got these financial indicators. If the model is not met, we don't invest. If we were to invest with all these indicators, we know that we continue to make a positive contribution to the current performance. So for instance, the 15% IRR is kind of a do or die metric for us. If when we put a new property into the model, it doesn't give us that return, then we'd probably walk away. The plan for the next few years is to continue to expand scale and increase market share. Again, that should be easy because the market is ripe for expansion. We want to truly, and a little bit like Premier Inn did, they came from nowhere. God knows other brands should have done that. We want to really establish ourselves as a differentiated product. So guest-centric, absolutely focused on quality. Those are the key drivers. This year we'll get to profitability. We've got sufficient scale in our business. We now can offset all the costs of being a PLC, and that gives us some reassurance in terms of governance. But again, it's been costing some money. We now get to profitability, so that's very interesting. And we start accelerating self-funding. So last year we bought 3 properties. We believe that once we spend the 10 million and add more properties in the portfolio, we probably can increase that to a higher frequency of acquisitions. And the other thing is, every time we grow, we find some economies of scale. We can automate things that probably are not automated now. We can look at our distribution cost in a different way. In fact, we can negotiate with OTAs to pay less than the normal commission. And that's the business model. Great. Thank you.
Thanks, Nuno. Do we have any questions in the room? Got one here, I think, and then we'll go over there.
Thank you for your presentation. I'm surprised that you didn't show any photographs of the places that you've invested in, because I've got no imagination as to what they actually look like. I was wondering if you had that. Secondly, all the places you've invested in are, I don't know if you're aware, but the UK is coming out of the EU. Does that have any effect on your plan? Thirdly, you were talking about Premier Inns, which are selling off their Costa business, and I presume they'll be looking for places to invest in their money. Do you see them as a possible coming in to acquire you? Thank you.
So thank you for all the questions. The images, now that you've said that, it of course makes sense. So I'll fix that for next time I'm doing this. Sorry, the second question was... Europe. Well, Europe is really interesting because our business is now more or less 65% Europe, 35% UK, and it will likely continue to expand at a higher ratio in Europe. But our business is very de-risked. The amount of revenue that we generate in euros should offset any risk to the pound. Equally, if the pound strengthens for some reason, we've got a good balance in there. We're not finding any particular challenges where I may regret saying this, but for the time being, we continue to get bookings at the same rate. We don't get any nervousness around our business model. And we think it's because hostels aren't really politically relevant. It might impact 4-star businesses and all of that. Our population, they kind of sit below all those tensions. The last point was, we would like to grow a great business and keep it forever. That is the ambition. The odds are that the likes of Premier Inn or a brand like that with money in the bank eventually look at us, and that's what we're trying to create. We're trying to create a platform that is so compelling to our guests that eventually will be compelling to a potential acquisition. So Premier Inn will be welcome in time to come and look at us.
I think there was a question just there.
Hello. You said you're turning over 14.6 million. How much free cash flow do you generate out of that? And how much internally funded expansion are you going to be able to do, and how much will you rely on your shareholders to fund your expansion?
So I've got my assistant here.
I don't have any mic, so I have a mic. No, I still have the dodgy accent, but I still have a mic. So to respond to your question, the one thing, the figure that you mentioned is 2018. So the only thing that we can disclose for 2018 is that the EBITDA, so our ability to generate the cash, right, is 3.4 million. right? So that works pretty well. If you look at it, it's 25% that you actually get from your top line down to cash. So that's a very, very healthy business to be in. And the more we grow, it's just 13 hostels if you think about it. So the more you grow this top line, and then the fixed cost will not increase by so much, which means that would be an exponential increase of the free cash that you deliver. So that takes me to your second question, which is how much of this...
How much your expansion is going to be internally funded and how much from the shareholders?
So this 10 million that we have just raised, that goes for expansion. Okay, this is expansion. There is no doubt about it. Then on top of that, this expansion will, of course, generate additional cash flow, which will come to add to the existing cash flow, which will generate expansion. So this is really, when we talk about these 40 hostels, it's not just an aspirational thing. We know that with this 10 million in the bank, plus this 3 million a year, plus this additional that we'll create, this is how we can fund having a mix of new leases, of potential freeholds, or existing operating platform, and that takes us to where we think we can be in 3 years, if it makes sense.
So you can get to 40 hotels without any more capital raises?
This is a more complex question, because that will very much depend on the mix of hostels that we have, whether we go, for instance, Vienna, the hostel that we opened last year, didn't cost us anything. It was an existing hotel, to be precise. We didn't pay anything to enter a new lease, and we actually even got something from the landlord to finance the few investments that we had to make to convert that into an hostel. So this, for instance, if we were to do 10 new Vienna tomorrow, doesn't cost us anything. Having said that, there'll be other properties where we may want to acquire a freehold, or we may want to acquire an existing companies which will come with an investment. So there'll be a mix, and we think that with 10 million and the additional cash that we generate, we can, by playing with this mix properly, we can get to 20 or 30 hostels. So we'll see. Maybe we'll be back in 2 years raising some more capital depending on the opportunities that we have. But that at least gives us what we have today, gives us comfort that we can grow to the next 20 to 20 hostels easily.
Thank you. We've just got another question over there. Thanks, Nathan.
Sorry, it's another finance question, actually. Sorry. Typically, are you looking at turnover for each unit of about 1 million and EBITDA on a rented one of about 25% average? So if you were doing forecasts to 40 units, could you say once they're mature, they're about 40? That'll be about 40 million.
Let me just put a layer to that. So up to this point, we've learned quite a few things. We've got a varied portfolio. So our property here in Edinburgh, Blackfriars, 615 beds in the summer. During the winter, we've got some student accommodation in there that eventually doubles up. So 615 at its biggest and 96 at our smallest. So we've got a few units that fall under that 200 threshold. So there's something about the profile of the business now that going forward, we know where we want to rectify it. It doesn't mean that these properties aren't positive contributors. They're not as positive as they should be, and we'll fix that going forward.
Okay. And just one other question. You said about that you asked people whether they'd come and stay again, and 86% said they would stay. But do you actually monitor how many people actually do come and stay again? So is that a KPI that you use?
We made a lot of inroads with systems. So at the beginning of 2018, we adopted a cloud-based tool that gives us all those indicators. We then extract all the information that comes from the system, and we map out guest profile, typical acquisition of ancillary, and so on and so forth. We need to get to a bigger scale to be able to adopt even better tools to get to some of that granularity, and then be able to use it as a commercial advantage. For now, in a rudimentary way, we do a lot of that. We understand who stays and how they migrate across the various properties. And then we use digital to tap into them and say, look, well, I noticed that you've used our Wi-Fi, for instance, in 4 different locations. We are giving you an incremental discount every time you use a property within the next 6 months, because at some point you reduce the potential for the guest to use the property. But at this point, it's a 12 open units. Paris is being fitted out as we speak. But at this point of growth, we've got a level of automation that gives us good information. But there's more to be pursued.
Thank you.
I think there was, yeah, there you go. One more question.
Thanks. If you think about it, some hotels, they've got a reputation for taking a property and really running it for cash quite aggressively. So an example, Hilton hotels used to have a reputation for really running properties into the ground. Now, in your case, you're actually owning the properties, you're not leasing them. And you've mentioned that one of the potential outcomes for your business is that you'll be taken over. So what is your approach to maintaining the standard of the building and the amount of money that you're reinvesting into the
Right now,
we've
got a majority of leasehold. So we've got the ideal business mix is that we would like to get to a point where we've got a good combination of freeholds, commercial leaseholds, which is typical in Europe, something around 15 years, and we've got long leaseholds. So our property in Blackfriars and our property in London, Elephant and Castle, they're long leaseholds, 150 years. So right now, we've got a majority of leaseholds. We're investing back into the business £940,000 in capex to upgrade the properties that we've acquired. So there's 300,000 allocated to Vienna, there's some money allocated to Brussels, and then there's a pot of £500,000, which is all about making sure that we create that competitive product. And this is very much because we believe if the product isn't competitive in the long run, you end up spending more money, and obsolescence is something that concerns us.
Great. I think that's all the questions we have time for, I'm afraid, but thank you very much, Nuno. Really appreciate that. Thank you.